Hey guys. All right. This is an SAP FICO training video. Within SAP FICO, you have the topic of accounts payable. Within accounts payable, you have business transactions. And this video in particular is for incoming invoices and credit memos from materials management and tax determination in the purchasing process. These are part of business transactions and accounts payable for SAP FICO training. If these videos are helping you on your SAP FICO training journey, please like, share, subscribe, comment in the chat. Let me know what kind of day you're having. Hope you all are having the best practice day ever. Try humor there. Okay. So our focus here now is incoming invoices and credit memos from materials management. As you all know, I like to put my information in question and answer format. Diving right in. Where are most vendor invoices and credit memos posted through? Integration with materials management. When a vendor invoice or credit memo are posted in MM, where do the resulting documents post? In financial accounting automatically based on account determination. What is the configuration for MM vendor invoices and credit memos called? Logistics invoice verification. Where is the configuration of logistics invoice verification performed? Materials management. Though it is MM's area of responsibility, who may have to configure the vendor invoices and credit memos? Financial experts, which would be you. Slang would be usins. What is the automatic invoice block? It automatically blocks vendor invoices that match certain criteria from being processed. Why does the automatic invoice block affect financial accounting? Blocked invoices need to be dealt with manually before they can be processed. What can the automatic invoice block be categorized as? A standard business control provided by SAP. All right, here's a menu path to configure tolerance limits. Materials management, logistics invoice verification, invoice block, set tolerance limits. Here are the tolerance limits set by company code. See the company code there, company name, tolerance limits description. I want you to note that new rules can be defined if you click new entries. I want you to double click BD, form small differences automatically. I'll take you to this screen. This tolerance key, BD, allows invoices that don't match on the debit and credit side to be posted, as long as the difference is not greater than the limit defined here. It's usually something like $2, $4, some kind of reasonably small amount. Green arrow back to the previous screen. Double click PP price variance. Here you define the upper and lower limits for a tolerance check. Lower limit section here, upper limit section here. So you can have an actual value or percentage, actual value or percentage. Any invoices outside of these limits will be posted, but automatically blocked for financial payment, for payment in financial accounting. So this would be something like $10 or maybe something like $5, 5%. Once blocked, the block will remain until either the block is manually removed by an authorized user, or the invoice is brought within tolerance limits. Okay, our focus here now is tax determination in the purchasing process. Question: why do you need to configure how tax codes are determined automatically in the purchasing processes? So financial documents can receive their proper tax treatment. What happens when you enter a tax code manually? It will overwrite the system's tax code determination. How are tax codes determined? From purchase orders using the condition technique. What is the condition technique? Condition records are created based on configured condition tables. What are condition tables based on? Parameters from the vendor master record. What determines the proper tax code for different business cases? The material master record or a related document such as reference item, contract, request for quotation, or info record. What might a purchase order have that accesses the relevant condition records and determines the tax code and tax rate? A pricing procedure that includes a tax condition. What is the standard SAP tax condition? MWST input tax. What departments are responsible for configuring tax determination for purchasing? Mostly finance, but also purchasing. All right, here's the menu path to define condition types. Materials management, purchasing, conditions, define price determination process, define condition types. Select activity, set pricing condition types / purchasing - purchasing. That'll bring you here. And on this screen, what you see highlighted here, this is a list of available purchasing condition types. Just want you to know that you can, as a custom type starting with Z and modify it as desired. To do so, all you do is click that gray space next to the condition type that you want to copy. That'll select the whole row for you, and then you'll click the copy icon. But for now, I want you to just double click MWST input text. I'll bring it here, and I'm going to walk you through some of these configuration points. Okay, so the condition class, as you see highlighted on the screen here, determines the usage of the condition type. For tax conditions, this value is always D for taxes. The calculation type specifies the type of calculation, and for taxes, it's normally A or percentage. Condition category classifies the conditions, and for tax conditions should be D for tax. All right, item condition. This should be selected for taxes to ensure that calculation happens at the item level, which is required for taxes. The records for access button highlighted on the screen here. This shows what records for access are maintained for the condition types, which determine the tax codes. These records can be maintained in T code MEK1. The records are considered to be application data. All right, here's the menu path to maintain records for access. Materials management, purchasing, master data, conditions, other, MEK1-create, or you could just enter the T code MEK1. That'll bring you here. You'll enter MWST for the condition type. The key combination options available are determined by the configuration of the condition record. Select Export Taxes and click the green checkbox. Enter the source country. Have it highlighted on the screen there. I want you to know that you can have multiple records for each destination country. You see, this one only has one record, but you can have many if necessary. All right, this first column here is for the destination country. This field is the country in which the goods or services are supplied, the country that the goods or services are supplied to. The second column here is for tax classification 1. You select a tax classification indicator, which is maintained in the business partner master record, and it normally specifies whether this business partner is liable to or exempt from taxes. This next column here is for tax classification material. You select the tax classification indicator, which is maintained in the material master record and normally specifies if the material is taxable at the full rate, a reduced rate, or not at all. All right, the valid from and valid to. These specify the validity period of the tax code. Tax rates can change, so this creates the option of adding more condition records. The tax code column. Specify the tax code that should be automatically assigned when the criteria in the condition record are met. Purchasing documents that match these condition criteria will receive the assigned tax codes automatically, which flows into financial documents and post automatically to tax general ledger accounts that are configured in tax codes. And that is all for this one, guys. If these videos are helping you on your SAP FICO training journey, please like, share, subscribe, and drop a comment in the chat. Let me know if today was a sunny day. Thanks, guys. Have a good one. Till next time. Peace.